Did you know that taking money out of your 401k could increase your Medicare costs? Every year, retirees are caught off guard when their Medicare premiums jump unexpectedly, and it's all because of one simple mistake. In this video, I'll break down exactly how your 401k withdrawals impact your Medicare premiums, the income thresholds you need to be aware of, some of the smart strategies to help you keep your costs low. And make sure you stick around to the end because I'm going to share a powerful strategy that can help you avoid these unexpected Medicare costs and keep more money in your pocket. Now, if you have any questions about your Medicare coverage, give us a call at the number below or use the link in the description to book an appointment with us. We help folks every day navigate Medicare and find the best plans for their needs. And we charge nothing for our services. Before we get into the 401k issue, let's quickly go over how Medicare determines your cost. If you're on Medicare, you're paying a monthly premium for Part B, which covers your doctor visits, and possibly Part D, which covers prescription drugs. What most people don't realize is that these premiums are based on your income from 2 years ago. And if your income is too high, you'll pay more for Medicare. This is called IRMA, Income-Related Monthly Adjustment Amount. And here's a kicker, 401k withdrawals count as taxable income. So if you withdraw too much in any given year, it can push you up into a higher IRMA bracket, which means you'll pay more for your Medicare Part B and your Medicare Part D. So let's look at an example. Say you're a married couple with a taxable income of $190,000 per year. That's under the IRMA threshold, so you'll be paying the standard Medicare Part B premium of $185 per person in 2025. But let's say you take a $50,000 withdrawal from your 401k to remodel your home. That pushes your income to $240,000 per year, bumping you into the next IRMA bracket for 2 years in the future. So now, instead of paying $185 per month per person, your Part B premium jumps to $259 per month per person. That's an extra $1,776 per year for you and your spouse, just because of one withdrawal. And for single individuals, the IRMA brackets are even lower, meaning it will take less income to trigger these higher premiums. Now, before we move on, I want to make sure you have all the right information at your fingertips. So I put together a free Medicare 101 guide that breaks down all the Medicare ins and outs. You can download that in the description below. Be sure to check that out. So let's talk about the IRMA thresholds a little bit. So it's very important to know your IRMA income limits before making large withdrawals from your 401k. So here's a quick rundown. The 2025 IRMA thresholds look back 2 years. So you're going to look at your 2023 modified adjusted gross income. If you're single, IRMA kicks in at $106,000 for the year. And if you're married, it kicks in at $212,000 for the year. And the more you make, the more you pay. Some folks see the premiums double or even triple at the highest bracket. I'll put a link in the description below so you can see the full IRMA bracket breakdown for 2025. So now we talked about the problem, let's talk a little bit about some possible solutions to help avoid these costs. Strategy number 1 would be a Roth conversion. If you convert part of your 401k to a Roth IRA before you're Medicare eligible, you'll pay taxes up front, but future withdrawals from your Roth won't count as taxable income. So this could help keep your modified adjusted gross income down in the future and potentially avoiding IRMA surcharges. But remember, Medicare looks back 2 years, so you want to make sure you plan ahead. Strategy number 2 would be spreading out your withdrawals. So instead of taking a big lump sum, you can break it down into multiple withdrawals for multiple years to keep your income below the IRMA thresholds. Strategy number 3 would be use qualified charitable distributions, also known as QCDs. If you're over 73 and you need to make the required minimum distributions, you can donate directly from your IRA to a charity, so the withdrawals from your 401k to a charity don't count as income, thus potentially avoiding an IRMA bracket and still meeting the required minimum distributions. Strategy number 4 would be delaying Social Security, because Social Security does count towards your modified adjusted gross income, thus counting towards IRMA. So if you're able to delay Social Security, that could help reduce your overall taxable income, in turn could reduce the chances of you going into an IRMA bracket. So to recap, 401k withdrawals can have a direct impact on your Medicare costs. And if you're not careful, you could pay hundreds or even thousands of dollars more per year for your Medicare Part B and your Medicare Part D. By using some smart strategies like Roth conversions, tax-efficient withdrawals, charitable distributions, delaying Social Security, these things can help lower your taxable income and thus lowering your Medicare costs and maximizing your retirement savings. If you have any questions about your Medicare, give us a call at the number below or use the link in the description to book an appointment with us. We'd be glad to help you out. If you found this video helpful, be sure to click like and subscribe to stay updated on all things Medicare. Thanks for watching the video, and we'll see you on the next one. Thank you.